what is the, like, you could use the word like darlings right now, right? Like what asset classes, multifamily, industrial, retail, right? What asset classes are you going out talking to lenders and they're saying like, yeah, right away? What are the ones they're saying no quickly to?
I mean,
They love deposits.
that's the best asset class. Yeah. I mean, apartments and industrial. E-commerce is still killing it. Retail was very difficult during COVID, right? I mean, because everything was shut down. It's barely bouncing back, and it's only bouncing back with like grocery store anchored type of buildings. That's retail. The new word to get retail a little bit stronger is medtail. So like medical offices, like a dental clinic and optometry clinic mixed with some retail. That's a little bit better. And then it kind of goes down from there. Office is tough again, and hotels are still riskier. I think other asset classes that are really hard, Airbnbs. Oh my God, they are like, it's like the redheaded stepchild. Like you have a random Airbnb, like don't get it twisted, it's a hotel. It's a startup hotel. If you are buying something and you've never done an Airbnb and you are going out to a lender, good luck.
Yeah, don't tell them it's an Airbnb.
Don't tell them it's an Airbnb. Just say you don't have a lease. Say it's vacant, but don't say it's an Airbnb. No, you don't want to lie, but I don't know. That's really hard.
But you don't want to tell the truth.
Yeah. And
if you want the loan.
Right. And just to add to the 1 to 4 families, we do a lot of those deals. I would say the banks are generally less interested than they used to be on them. They don't want a bunch of scattered sites in one loan. It's hard to unwind. It's a lot of work to do them. They still do, but they're just going to price them higher. So there's other lending sources for that than banks.
Yeah. On the property type discussion, I had an interesting call today. It was from a former bank client of mine. I did work at BMO, by the way. This wasn't BMO, though. It was another large local bank. And he said, hey, I just want to let you know I closed on the refi of my retail property. It's not really retail. It's a Culver's standalone. No Culver's has ever closed, by the way. It's like solid credit. And he said, yeah, I said, why'd you refi out of there? He's like, well, your former lender told me I was in special assets and I had to. I said, aren't you at like 40% loan to value? And this guy is solid, signs full recourse. He said, yeah, they said, no more retail in the bank, and I had to exit. So, I mean, some lenders, why they do those things, it's mind-boggling. You're turning down great revenue for what reason? And then the word spreads in the community, you get a bad reputation. So another unsolicited piece of advice is community banks are where you want to be until you get too big for them, and then you still want to try to make a way to get a couple to work together, because these large banks will make these decisions. Someone that's not even in your market, somewhere in some office in some other state, is going to say, I read an article in a Wall Street Journal that said retail is bad. No retail. Tell everyone. Some kind of crazy decision, and it's going to affect you. Being able to talk to somebody locally is huge. It is huge. So also relationships with your community lenders are going to be the best thing you can do is make those connections and establish and solidify your relationships. It is a complete relationship business. Developing, being a landlord, and your lender. That's the biggest relationship, in my opinion, maybe I'm biased, that you need to have, because they have the access to the largest part of your capital stack on any deal you're going to do.
Matt, do I owe you money for that plug for community banks?
No, yeah.
And by the way,
I work for cocktails.
we have Culver's. When you talk about asset classes, that's one franchise that the cash flow on those is phenomenal. Those are fairly easy to finance. And then C&I, not on the C&I, but the industrial space, just to get how hot that is from southeast Wisconsin to Madison, we haven't held a property longer in a spec construction longer than 3 years with it going secondary. And that market's just been hot. It probably will slow with rates going up.